Assalamualaikum and a very good day to Dr. Nur Afzal. My name is Amira Faizah binti Amran, matric number 261035. Today I will be presenting about Case 5, Tax for the CFO, Should Pfizer Acquire Allergan? Pfizer Incorporation is the pharmaceutical business that also has candid treatment for an intestinal illness. It was established in 1849 at New York. Pfizer business also has medications including Viagra, the pain drug Lyrica, and Prevnar, a pneumococcal vaccine. The partner they want to merge with is Allergan. Allergan was established in 2013 with merger of two large pharmaceutical companies, which is Actavis Incorporation and Warner Chilcott. It was domiciled in Ireland but has headquarters at New Jersey. Its business include brands such as Botox and Namenda. Based on this case, the main issue for Frank D'Amelio, the Chief Financial Officer, is to make decisions on whether Pfizer needed to proceed or stop the merger talk between Pfizer and Allergan. Both companies had less than a week to either formally agree with the merger or walk away. But what is stopping D'Amelio from making decisions? Let's find out the causes of the problem first. There are three causes of problem. The first one is the decline of revenue for Pfizer. Over the past 3 years, the revenue for Pfizer keeps declining, whereas mentioned in the case. This decline in revenues had resulted in the stock price to be relatively flat and making the investor restless. Based on this, Pfizer will need to take one big move which can help them to increase their company's financial performance as well as their competitive position among other global pharmaceutical giants. Previously, Pfizer had failed to merge with AstraZeneca back in 2014, so Pfizer thought that the right time for another merge was in 2015 because there were not a lot of targets that are large enough to fulfill Pfizer's need. The second one is the fierce competition and increased consolidation in the industry. The rapid growth of the US pharmaceutical and biotech industry make the industry's competition fiercer and consolidation of companies increase. Both Pfizer and Allergan are companies that are involved in pharmaceutical businesses. Even Pfizer is already one of the successful pharmaceutical businesses in the US, they need further growth in the company too. Pfizer sees an opportunity to merge with Allergan to further improve their growth in the industry. This is because Allergan focus on fast-growing brands that will yield top-line growth in future years. The merger deal with Allergan will give value added to Pfizer as they can increase several valuable high-growth products to Pfizer's product portfolio too. This situation of the rapid growth in the industries make Pfizer feel challenged to improve their business and considers the merger deal with Allergan. Lastly is the high worldwide tax rate. The current worldwide tax rate for Pfizer is 25%, which makes it costly for the company when they are doing international operations. Moreover, the US Treasury Department had recently announced that they will target the merge that aimed to relocate the company's tax residents to a lower tax country, which was called as tax inversion. Even though the legal team said that the tax inversion should be labeled for the merging with Allergan, some also said that the benefit of it also originated from the tax savings due to moving the tax residency of Pfizer from US to Ireland. Apart from that, the legal team ensured that the merger with Allergan will not be affected by the announced changes made by the US government. Therefore, if the merger happens, the worldwide tax rate for Pfizer will be at 18% instead of 25%, and during the time of the merger, the highest Irish tax rate was at 12.5% and US was at 40%. Thus, the initial high worldwide tax rate for Pfizer can greatly be reduced when the merger with Allergan is proceed. This high worldwide tax rate shows why it is crucial for Pfizer to consider whether to proceed or stop the merger talks with Allergan. Next, we will move on to the decision criteria and alternative solution. There are some decision criteria to be considered in selecting the best recommended solution among the alternative solutions. The decision criteria are time for implementation and effectiveness of the solution. Time is very important to be considered by D'Amelio as Pfizer need to accelerate the merger work from 9 to 6 months in order for Pfizer to finalize the merger way before the new policy is finalized. Besides, D'Amelio also need to consider the effectiveness of the solutions, whether it can be used to justify that it is right for Pfizer to take the opportunity and merge with Allergan. Here are some alternative solutions for the problems. The first one is by transfer pricing. Transfer pricing is setting the price for the goods or services that are being sold between the related parties. In this case, for example, between the US parents and their foreign subsidiary. The main reason why transfer pricing is being applied is that the tax rates for each country are different, so it will be difficult when a company wants to do transaction with another company from a different country. Transfer pricing also enables the company to shift their profits to a lower tax foreign subsidiary, even though sometimes it requires the company to do the substantive operational changes either by opening an office or increasing the headcounts in the foreign jurisdiction. Shifting profits mean the company has more income in the foreign country as well as more expenses in the US itself, but it also has some consequences whereby the profit of the company will be locked into the low tax country, and if they want to repatriate it back to the US, it will cost them to pay an additional tax which will be much higher than the foreign country. In the case of Pfizer, they have accumulated 74 billion foreign held profits. The second alternative solution is tax inversions. Tax inversion is the process where a company employs strategy to reduce their tax burden. The company, which is primarily based in the US, decided to change their tax resident by merging with the company that was already a resident in a low tax rate country. It is a legitimate practice which is not considered to be tax avoidant as long as it does not include distorting facts on a tax return or performing criminal actions to hide income. But the uncertainty whether the US regulation will be changed has become a major threat for Pfizer. However, regarding the uncertainty, both Pfizer and Allergan legal teams assured that the new rules will not interfere with their proposed deal as long as the proposed merger deal is done within 6 months, which is before the new policy is finalized by the US politicians or regulators. The last alternative solutions that can be used by Pfizer in order to make a decision to merge or not is by using net present value. NPV is a tool that is used to determine the current value of all future value, either positive value or a negative value generated by a project or investment. In simple words, NPV analysis is used to help determine how much an investment, project or any series of cash flows is worth. By using this method, it is determined by calculating the difference between the present value of the cash inflows and the present value of the cash outflows for a period of time. After considering both pros and cons of each alternative solution, I would like to recommend Pfizer Incorporation to adopt the transfer pricing as a method that can help the company to make decisions regarding the merger with Allergan. It is one of the most common strategies that US companies use in order to temporarily defer US taxation on profits. Transfer pricing also enables the company to shift their profits to a lower tax foreign subsidiary. As for the companies, regardless of their tax residency, the companies will pay the tax to the country where they receive income from, and sometimes they might even have to pay double tax to their own resident country when the profit from other country is being repatriated to the country of residence. A portion of a firm's operation can be moved into a foreign jurisdiction through transfer pricing, as it helps to balance differing jurisdictional requirements, which means that the US parents could be charged by their foreign subsidiaries for the purchases of goods or services. Other than that, regarding shifting of profits, the lower tax rates could have a significant impact to the amount of tax paid by the corporation in the year that they earn the income, even though the tax saving will long last until the income being repatriated. There are a few methods of transfer pricing that can be applied by Pfizer in deciding to proceed or stop the merger deal with Allergan, which is resale price method, transactional net margin method, and transactional profit split method. Besides, we also recommend Pfizer Incorporation to use net present value method as contingency plans to solve the problem. NPV will determine whether the merger deal between Pfizer and Allergan will lead to a positive or negative value. A positive NPV indicates that it is better for Pfizer to accept the merger deal with Allergan, while a negative NPV indicates that it is better for Pfizer to reject the merger deal with Allergan. If the NPV is 0, Pfizer shall remain indifferent. By using NPV, Pfizer can calculate the potential tax savings on repatriating offshore profits and tax savings on any future profits. This is because NPV uses present value, which will enable the MLU to forecast the future profits, effective tax rate, as well as the discount rate to account for future benefits. That's all from me. Thank you for lending your ear.